Are you behind on your mortgage payments? Are you facing foreclosure? Do you know your options? Frank Napoli and Colton Whitney from the Napoli Group discuss what you need to know about short sales today on The Truth About Short Sales with the Napoli Group.
Hello and welcome to The Truth Behind Short Sales with the Napoli Group. My name's Frank Napoli.
And my name's Colton Whitney.
If you've applied for a loan modification or a refinance program and you have been denied, you do have another option before foreclosure, and that would be a short sale. All right, a short sale is when you negotiate with your bank to sell the house for less than what you owe, but you negotiate for the bank to forgive you the deficiency that you owe and negotiate with the bank to have them waive their right to pursue you for any money in the future.
The purpose of a short sale versus a foreclosure is to soften the impact on not only your credit, but your ability to obtain financing in the future, and most importantly, to ensure that the bank doesn't have the ability to come back after you for the remaining balance that is left unpaid. It's our job to ensure that the verbiage within the approval letter actually states that not only the servicer who services the loan, but also the investor and any and all of the interested parties in the transaction are waiving their right to seek you of the deficiency balance.
If you simply just stopped making a mortgage payment on your house, then the bank's going to go through a process of foreclosure. First, you're going to receive a notice of default that's going to state that you are officially in default of your mortgage. From that point on, if you don't do anything about that, the bank then has the ability to file a notice of sale, which will name a date that your house will actually go up for auction. If you do stop making your mortgage payments, the first thing that your investor or the lender that you're making the payments to, first thing they want to know is, what are your options? All right, are you going to try to modify the property to try to make your payments more affordable to stay there? Are you going to try to do something to where we can negotiate a term that's going to make the payments more affordable to you? Or are you going to try to do a short sale? The last thing you want to do is just say nothing and to remain silent, because at that point it's going to be up to the investor to take that property back so he can sell it himself so he can get his money back.
Absolutely.
Now, if you find yourself in a situation where you just can simply not make your payments anymore, and if you do stop making your mortgage payments, then the bank will go through a process of foreclosure. After a certain amount of missed payments, the bank will file a notice of default against you, which will state that you are officially in default of your mortgage and that foreclosure proceedings have actually started. If you don't do anything from that point, the bank then can move forward to foreclosure. They'll issue a notice of sale on your house, which will name a sale date in which your property will go for sale, and then eventually foreclose. If the bank does foreclose on you, the bank has the legal ability to pursue you for the money that you owe them. Then most likely most homeowners will at that point file bankruptcy to eliminate that debt. You do not have to let it go that far. You can stop the foreclosure process, prevent the foreclosure process, and the need to file bankruptcy by completing a short sale. If you just let your house go to foreclosure, the bank then has the ability to pursue you for the amount of money that you owe them. If the bank does sue you for the amount of money that you owe them, then most likely you're going to have to end up filing bankruptcy to eliminate that debt. It should never have to go that far. You have the opportunity to short sell your house and negotiate that debt to where the bank is going to forgive you the money that you owe them and waive the right to pursue you for anything in the future, therefore avoiding bankruptcy and the foreclosure on your record. Now, why would the bank allow you to short sell their house, allow you to completely wash the mortgage that you have, and why would they ever waive the right to pursue you in the future?
There has to be a financial benefit for the banks. The banks want to ensure that whichever process that they choose to take, whether it be short sale and or foreclosure, that which one's going to net them the most money. And generally a short sale is far less expensive than performing a foreclosure process. They have to pay the attorney fees, they pay the late fees. There's a lot more costs associated with doing a foreclosure than a short sale. And also the condition of the property at the end of each process. You know, when a bank has to take a property back, if a homeowner knew that the property was going to go to foreclosure, they don't maintain it. They don't take care of the property. They, through a short sale, generally maintain the property. They generally continue living in the property to ensure that it's not vandalized and that the property is in good overall condition, which means that the home gets a higher price per square foot than if the property were to be vacated, abandoned, and sent through foreclosure.
Well, not to mention, the homeowner has something to gain through a successful short sale.
Of course.
You know, if a homeowner's in the process of a short sale and they're not taking care of the property, the buyer at that point could always back out. The whole purpose for a homeowner to do a short sale is to get complete forgiveness from the bank and to move on without any repercussions from them. You know, someone who's living in the property and who has something to gain, of course, just like you said, is going to take more care of the property or take better care of the property. Now, of course, that is a benefit to the bank. okay, because market value is market value. If a house is worth $200,000 through a short sale, it's worth $200,000 through a foreclosure.
Exactly.
However, through a short sale, the bank incurs less costs versus a foreclosure where they're going to net less. The bank's looking for a couple things when they're actually looking at your financial statements when you're negotiating a short sale. They're looking at your tax returns to see what kind of money you made over the last 2 years. They're looking at your bank statements to see what kind of money you have in the account. They're also looking at your check stubs to see what your monthly income is. But they also want to know what your monthly debts are, and they're verifying that you are having a difficult time making those mortgage payments. At the same time, while they're checking to see if you qualify for a short sale, they're checking to see what the likelihood of them winning if they pursue you after foreclosure would be.
Of course, the bank wants to know the probability of if this property does go to foreclosure, will we have the ability to collect on this debt? And in a lot of cases, they know that they won't have the ability to collect on that debt, whether it be because your only source of income is protected income that can actually be garnished or attached. They need to know, can we actually collect on this homeowner? And they also know that if they're going to incur all the costs of foreclosure, net less money on this sale in hopes that they can obtain a deficiency judgment, what's going to stop the homeowner from just filing a bankruptcy and eliminating their ability to pursue of that debt?
Which, if they have to take that house back, is going to cost them more money in the long run because they have to sell it themselves.
Cost more, net less, and at the end of the day, chances are they're not going to have the ability to collect on that homeowner because the homeowner is going to protect themselves with that bankruptcy shield.
Absolutely. So there's obvious benefits for a bank to entertain a short sale. You know, we get that common question so much. Why would they want to forgive us? But those are the reasons why. It makes no sense for a bank to pursue foreclosure and bankruptcy if they know they're not going to net anything at the end or if they're not going to win in a court of law. So the benefits to a homeowner, of course, throughout the short sale is that you are completely forgiven of the mortgage you owe. Not to mention that the bank completely waives their right to pursue you.
There's a lot of other benefits for a homeowner to proceed with a short sale versus foreclosure. One being that a short sale generally has a much softer impact on your credit, simply because not only do you have less delinquencies because a short sale is generally facilitated faster than the foreclosure, it also impacts your ability to obtain financing, whether it be for a vehicle, whether it be for a house. It impacts that ability far less than a foreclosure does. So your reset cycle is much shorter through a short sale than it is through a foreclosure.
What you're showing future creditors if you let your house go through a foreclosure is that, yes, you stopped making your payments, you had a problem, but as far as your future creditors see, you just let the house go. You didn't do anything for your current creditor at that time. And if you file bankruptcy, you've just eliminated your debt and you walked away without any regard. If your future creditors get a chance to see that you did a short sale, it solidifies a few things. Yes, you did have problems. Yes, you did miss some payments. And yes, that house was eventually sold and that debt wasn't satisfied as originally agreed, but you took the time to actually go through and prove your case to the bank. You took the time to actually go out there and find a buyer. You took the time to provide the necessary documents to prove to the bank that you had a hardship. And you did something for that lender or that creditor by bringing them some type of settlement rather than just making it their problem.
Of course.
And not to mention, if a future creditor sees that you have a short sale on your record versus a foreclosure, it solidifies that you truly had a hardship at that time, which, hey, we all go through hardships. Things happen, and especially now with the economy the way it is, be one with the masses and go for this short sale so these banks can understand that, yes, you were a victim of the housing economy just like everybody else was, yet you did something about it rather than put your hands up and make it the bank's problem.
Well, and the most important part that people have to understand is there's more to it than just, I did a short sale. Me as your future potential lender, I'm also going to want to see that you were forgiven of that debt. Through a foreclosure, the statute of limitations is generally longer, and as a result of that, they know that at any given point in time, if I give you this money to buy this car that you can afford today with your current debt obligations, or if I'm going to give you money for this house, does the previous lender that you performed a short sale have the ability to pursue you or not? Because if they do, you can guarantee that I'm going to feel extremely unprotected and vulnerable to that lender being able to come against you and sue you in court to obtain that deficiency judgment. They want to see that you have no other snakes in the grass that are going to be able to come and bite you at any given point in time.
Absolutely. If you're applying for a new mortgage, they're looking at your debt you have now, your income you have now, and they're giving you that mortgage based on your current financial situation. And just like you said, they want to make sure that there's going to be nothing that can come up to upset that current debt, the financial income that they have right now, or that financial debt to income ratio that they have right now.
Of course.
So no, that is a very, very good point.
At the Napoli Group, we are here to answer your questions honestly and professionally. We meet with you one-on-one and devote our experience and knowledge to your case. If a short sale is an option for you, then call the Napoli Group. There are no costs, no hidden fees, and our service is absolutely free. Stop worrying and wasting your time and call the experts today. We're located at 6620 South Tenaya Way, Suite 120, or visit NapoliGroupRealtors.com. Call 378-3629 today.
When you enter the Napoli Group office, you can expect to be greeted with warm reception. You'll meet with us face-to-face for a one-on-one discussion. You'll experience the professionalism and intelligence of our entire group. We spend countless hours on education in order to stay current with market conditions and the ever-changing government programs. We have a full staff, including an in-house mortgage professional, management, legal, and so much more. We fully understand the importance of giving you the proper information to handle your situation, and will address your case with genuine compassion and consideration. We are a family business, and as a client, you will be treated like family as well.
Coming up, Frank and Colton talk about short sale programs that could benefit you today here on The Truth About Short Sales with the Napoli Group.